Hello and welcome to today's video, which is called SPY Inflation Crash. So let's examine the case for whether stocks would surge, go sideways or go down based on the upcoming inflation data Tuesday and Wednesday's CPI. First of all, you know pretty well my site and what I do for clients. Now that they are served, I'm recording today's video to get you through the opening part of this week. So it will be covering plenty of stuff, a lot of ground. Make sure that you have reviewed the weekend video and as well the late Friday's one, where I thought to show you how it's possible to turn any day into a winning one based on correct interpretation of non-farm payrolls, what it does to the macroeconomy, Fed monetary policy shifts, and what it means for us as traders and investors. Starting first with the weekend Sunday chart for Bitcoin. You can see that it has trouble crawling higher, and I expressed great doubt about it holding $92,000 to $93,000 support, which it had done already twice before. You could have heard me as well point to continued MicroStrategy underperformance, and that's never a good sign. And lo and behold, this is what we got today pre-market, Monday pre-market, clear break of 91, and I frankly do think this will stick, and that means we are going lower, significantly lower, because there is little to hold us above 72 or corresponding to the 75 roughly thousands value on Bitcoin, which was the higher turquoise support line on the preceding slide, where some bit may start emerging. So that's given cryptos having turned into a liquidity play, given what Friday meant for Fed rate cutting odds moving first to maybe October. Let's see how it goes. This is what it means for cryptos, and now let's dive into equities. This is how it looks, and I've shown you two support lines with futures values, March contract for ES. And you remember still on Friday my call for S&P 500 to close near the intraday highs, and see how it unfolded. Clear break in the pre-market hours, because the market breadth and overall strength of the bullish signals and data from China and everything else is not painting a bullish picture. Of US dollar, of course, is continuing higher, and so are yields grinding higher. So that's the macroeconomic environment we are facing. You can see that notwithstanding the latest rebound on this 4-hour chart of the say 5,815-ish, 20-ish area, that ES is still within the developing part, opening part of a downtrend after it clearly broke the 5882, 87, 5892. This is strong support area. Pardon my typo, it should be 5892, reading as the strongest single level if I had to pick one. Otherwise it's the zone reaching approximately 10 points lower for ES. It had been broken to the downside very clearly. You will see me further on feature several breadth charts and how it's looking when sectoral performance is examined, and it will be frankly quite clear why I post such a high confidence call for equities to continue lower, given that there was no little respite on non-farm payrolls, no possibility to have a fake upswing that we could be selling into. So that is for S&P 500. The further chart shows that there is clearly no Nasdaq leadership either. Both charts are in emerging downtrends, and there is little to hold them. But circling back to the preceding one, you see the lower level. I have approximately 15 to 20 points beneath it, a resounding support area for ES. So that is what should and could be providing some interim support. And Nasdaq is clearly showing that there is no Nasdaq tech leadership to speak of, and clearly hammered Russell 2000 is not bothering swinging higher either. This is a little preview for what trading signals and stock signals clients are getting. This is an alternative view of market breadth, where I toy around with various periods of moving averages and examine what's the percentage of stocks trading above these. And you can see steady deterioration, and these are Friday closing values, so be ready for quite a decline in this view today as well. You can start looking at period number 5, the one that encapsulates last 10, 20 or 50 or 200 moving averages going back this many candles, and the view would be quite similar. There is no consistent improvement and turnaround starting from the bottom and going up in these values. There is nothing to trust from the position of swing trading. Sector tracker. Over the last 5 days, I have talked a few times on the rush to energy and continued bullish calls on West Texas Intermediate. This has been delivered. 74 had been soundly beaten to the upside. The same for moving averages that I'm charting for clients. And you see that financials are not really leading to the upside when you see consumer stocks beating this soundly. Communications, this darling as much as tech, IGV, semiconductors, this is not at all risk on. See as well industrials that had declined during the prior week. This is and one should not be expecting them to do this on autopilot when US dollar is strengthening. Therefore, this paints a clear risk off picture, and utilities are rising on the electricity data centers theme, healthcare serving as a safe haven, a risk of refuge, and there is frankly nothing else in green to speak of. So that is the outlook, taking us into inflation data. Expect a lot of volatility, and a little preview first with PPI, and be ready for CPI. Stay tuned for more pre-market and aftermarket coverage, whether on Twitter, YouTube, or on my site. Thank you for liking this video, subscribing to the channel and upvoting this video. Join URL to help you select. You know pretty well my journey and all the obstacles I had to overcome so as to serve you independently, unrestricted, free from interference as regards the scope of what am I allowed to bring you. It had been a thorny journey, great journey, full of surprises and unexpected twists and turns, but here we are, growing, and I'm very happy to be delivering for you. Obligatory disclaimer. Have a great day and talk soon.